Thank you so much for joining me. My name is Tim Nash. If you don't know who I am, I think most of you do, but if you don't know who I am, I'm a certified financial planner. I'm the founder of Good Investing. I've been working in sustainable investments for over 15 years. I've helped more than 1,000 people align their investments with their values. And I'm really excited to be able to present a new presentation tonight, Sustainable Investing in an Unsustainable Economy. Things feel really scary right now. There's a lot going on in the world. And so I think it's a good time to be able to revisit some of these concepts and really understanding what is a sustainable economy, how the economy is currently unsustainable, but why sustainable investing is still so important. And then as part of this, I've got a few actions that you can take today, tomorrow, whenever you're up for it, to be able to start moving things in the right direction. So I do want to start with some acknowledgements. Quick little land acknowledgement that I am in Toronto, which is the traditional territory of the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples. This is the Dish with One Spoon Wampum territory. So that was an original agreement that brought a lot of peace to this land. And then this was part of the Toronto Purchase, also known as Treaty 13, which I've taken a look at and pretty shocked by how little was traded for all of this land that is now obviously worth, probably billions and billions of dollars. So it's pretty remarkable. I would love for you to share where you're from. If you know the traditional land or the treaty that your land is a part of, by all means, please put it in the chat, but just let us know where you're coming in from. Would love to know that people are likely tuning in from across the country and maybe even from other parts of the world. So just put in the chat sort of who you are, where you're from. Quick little introduction would be great. As well, I want to acknowledge I'm here in Toronto. I live in Cabbagetown. A few blocks away from me is Allen Park. And in Allen Park right now, we do have an encampment of people who are experiencing homelessness. So I realize I want to acknowledge feels a little crass talking about investing and what we do with our extra money at the end of the month when there are people literally living a few blocks from me who are really struggling to get by. And right now in this economy, so many people are paycheck to paycheck. So I just want to acknowledge the privilege for us to even be talking about investing, means that we do have some wealth, we've got some money, we've got some privilege, but with that power comes responsibility. So in my mind, it is with that privilege that even more reason for us to be intentional about what we do with our money and how we invest that money. I just think it's so critical for us to be deliberate about how we invest. So really can't thank you enough. Want to welcome each and every one of you. There are about 40 people in the webinar. We had about 120 people sign up. So I know a lot of people are going to be watching this after the fact tomorrow. We're going to be able to post this video, and really just can't thank you enough for joining me, for spending a little bit of time with me tonight. So I'm going to jump right into it. Typically when we talk about investing, we end up with a lot of pie charts. I want to start things off with a cake chart. Really, when it comes to the economy, right now we are in an unsustainable economy. I think it's really important to define this concept of the economy. What is it? What does it mean? This is one of my absolute favorite images describing how I see the economy. This is an image from a mentor of mine, Hazel Henderson. She created this back in 1982. So this by all means isn't a new idea, but it is still just as relevant and as poignant. Sadly, Hazel, she was a mentor of mine. She passed away last year. So certainly love being able to share a lot of her thoughts and frameworks. But really, she talks about the economy as a cake. So the bottom layer, this sort of rich, dark chocolate, soil colored layer is Mother Nature. That without Mother Nature, without the planet, there is nothing. There is no life. We do not have society. We do not have an economy. That really all of our entire economy rests upon Mother Nature, that without Mother Nature. Without that layer of the cake, there is no economy. From there, she's got the love economy, which I absolutely adore this term because this is all of the unpaid labor that happens in our economy. So, how many people here in the chat volunteer for a group or an organization? How many people have raised children without pay? How many people have babysat for family members or care for an elderly family member? These are all unpaid activities that are absolutely critical to our economy. Our economy could not exist without this love economy. Of course, we do have the underground economy or the black market, right? So this is if you've ever bought something off of Kijiji, right? Then you've participated in the underground economy. And all of these are non-monetized, meaning that they do not count towards our economic measures. The dominant economic measure that we have is GDP, gross domestic product. Back in the day, it used to be referred to as GNP, gross national product. Now we talk about GDP. And really when it comes to GDP, so this is now in the realm of, okay, when the news talks about the economy, they tend to ignore all of these layers and they only focus on the public sector, which is our government spending. It's our hospitals, our schools, our roads, all of that public infrastructure that we've got. And then really it's, what gets most of the attention is just the icing on the cake, which is the private sector. That when it comes to investing, this is really what we're talking about. Is this private sector, is that sort of, very sweet, very saccharine icing on the cake, which is the stock market and the private sector. But I want to be clear that that private sector could not exist without all these different layers of the cake. So we are going to be, when we talk about investing, we are pretty limited to this one layer of the cake, but I want to be clear that really, the economy is so much more than just the private sector. From there, when I talk about the systems that our economy are a part of, I like using this systems thinking, right? Where we often talk about biosphere or the environment, society, and the economy as three separate systems. But we know that these things are very much interconnected. And to describe the interconnection, I tried to get sort of an animation to work, but I couldn't really get it on the software in the way that I wanted. So I'm actually going to take you back all the way back to, this is my first ever YouTube upload. So this is 13 years ago. I made this YouTube video. It's had almost 7K views, but I'm just going to play this to you. It's about a minute and a half, but this really explains my view for sustainability and what that is.
Sustainability is the story of three systems: our planet's biosphere, human society, and the economy. Although we often talk about each of these systems as if they are separate, they are obviously linked. The economy is really a part of society and depends on it for inputs in terms of labor and outputs in terms of customers and clients. Without society, there is no economy. In the same way, society is really part of the larger biosphere. Everybody needs fresh air and water to survive, and the economy depends on the earth for energy and raw materials and deposits various forms of waste back into it. When we use this kind of systems thinking, it's obvious that social and environmental issues should be of chief concern to the economy. Our economy can keep growing forever only if we stop degrading the social and ecological systems upon which it depends. Unfortunately, that's hardly the case. These days, the rising wants and needs of humanity are apparent with the rapid growth of emerging countries and increased consumption worldwide. At the same time, the Earth's capacity to meet these needs is being diminished as almost every natural resource, renewable and non-renewable, is being systematically depleted year by year. These trends cannot continue forever, and the longer they persist, the more treacherous our planet, society, and the economy will become. Sustainability is about altering these trends into a more stable pattern. By focusing on basic necessities for everyone and meeting them in a way that doesn't hurt other people or the planet, we can create the conditions for a sustainable world. For you scientific types...
All right, so that's really, to me, that's what I mean by sustainability. That really is kind of the key concept. This is what I spent a year in Sweden. I did my master's in sustainability back in 2007, 2008. And it's really about this notion that the economy is part of society. Society is part of the biosphere. That the only way we can have an economy that continues to grow is if we stop degrading our social and ecological systems. And that's just not happened. Over the last 13 years, it's gotten worse. Right. I thought about, when I was doing this presentation, I had some slides of some of the smoke from the wildfires this year, the flooding or the droughts that have been taking place, and really decided against any of that kind of doom and gloom imagery. I think we all know that things are really messed up right now, right? And I think they are getting worse in a lot of ways. That unfortunately, the unsustainable trends that I noticed 13 years ago have continued and arguably have gotten that much worse, that income inequality is worse. Certainly, we are now seeing the effects of climate change. Like, this is really, I feel, the year where we are living through climate chaos. And every single province, every single country has been touched by this crisis that we're in right now. So really want to acknowledge that today's economy is inherently unsustainable. We cannot keep going the way that we have been and expect that everything is just going to be hunky-dory and no problem. If we continue on this path, like if we do nothing and it just kind of keeps going, this is a sort of comic from the New Yorker. Yes, the planet got destroyed, but for a beautiful moment in time, we created a lot of value for shareholders. It really seems that it is the people at the top, the wealthiest individuals, who are really benefiting the most from this, while the rest of us are the ones that are really kind of dealing with the fallout from a lot of this unsustainable behavior. So it is what it is. That is where we are today. And things are bad. I'm not here to sugarcoat it. Like, really want to acknowledge that things are really bad right now. But I'm here to tell you that investing is still really important. I meet too many people that see how messed up things are in the world in terms of climate change, in terms of inequality, really pick your issue, the housing crisis that we're in right now. And, it just feels kind of defeatist, like, I should just do nothing, or people get frozen. They're just like, I'm too scared to take any action. And really, I'm here to tell you that investing is still absolutely critical thing for you to do, because money is our life's energy. That every day we trade our time and our energy and our effort for money. That's what we do. And when we spend our money, right, we are then trading that life's energy for experiences, for goods, for services, for food, for rent and housing, and all the things that we use for money. And it's really interesting because I think that money, really, if you want to understand someone's priorities, look at their budget, look at how they spend their money, whether it's a government or whether it's an individual. Understanding how people spend their money, that's just such a clear indication of what's important to them, and that's what they are spending their life's energy on. And it's absolutely critical that we understand and we're intentional about how we use our money. And most of us are. I know so many people that are on this webinar, right? I know that you're very intentional and deliberate about how you earn money, that you want to work for a company that you feel is having a positive impact, that so many of us work in sectors and in industries where really we're at least trying to, do less harm, and hopefully we're trying to do more good. And that day to day, that's how we're earning our money. I know almost everyone in this webinar is intentional about how they spend their money and wants to go out of their way to invest or to spend, to buy from companies that are local, companies that are sustainable, buying organic products, fair trade, all of those wonderful things. I know we take the time and effort to be able to be intentional about how we spend our money. And so I'm here to tell you that I want you to take that same intention and apply it to how you invest your money. That sadly, most people haven't thought about how to invest their money. And the result is they end up investing in these default things that just really aren't aligned with their values at all. And so really my hope is that you'll embrace this notion, this realization that money is your life's energy, and that we need to be intentional about how we earn our money, how we spend our money, and how we invest our money, which is what we're here to talk about tonight. And the reason you need to invest is because every year money loses value to inflation, right? It's kind of like we're on a treadmill. If you're on a treadmill and you just stand still, right, you're going to go backwards. And that's what happens when you keep money under the mattress. If you decide not to invest your money, you just keep it in a checking account, right? You're losing that value every year to inflation. And for a lot of us, inflation hasn't been a big deal. Like over the last 10, 15 years, inflation was quite low. We didn't feel the effects. But now all of a sudden, right, I think everyone is feeling the effects of inflation. Everybody realizes that things are getting more expensive. That we are sort of on that treadmill, that we need to be going at least keeping pace with inflation. And in a dream world, we're actually earning more than inflation so that we can be growing our retirement nest egg. But really understanding that if you do nothing, that if you kind of look at the economy and, oh, it feels uncertain and it feels scary and it feels unsustainable, so I'm not going to invest, that you are actually by default losing value of your money every single year, right? And that's why it's so important for me to reiterate that it's not enough to just simply save money. We need to invest it. I'll never forget very early on in my career, when I started working as a financial planner, I met a woman. I met her at an eco fair. She had been a lifelong environmentalist. She was now in her early 60s. I think she was about 63 years old. She told me, Tim, I always thought the economy was going to crash, that it was so unsustainable. It was so obvious to her that things were unsustainable. She just assumed that the economy would crash, the markets would crash. And as such, she kept her money in cash. She never invested. And she was in her early 60s, and she had managed to save up, I think, about $350,000, which is incredible. That's a huge accomplishment, being able to save that much money. But because she had never invested it, it had lost its purchasing power to inflation. And 350K, as much money as that is, it's not really enough to retire on anymore. And so it was really a big reckoning for her that she had assumed that because the economy was unsustainable, that she thought everything was just going to collapse and she was better off keeping her money sort of under the mattress or in very, very safe, low interest accounts. And now she was in a very challenging situation because she wanted to be able to retire. She was getting towards the age where she ought to be able to retire. But because she hadn't been investing her money, she wasn't able to. She knew she was going to have to keep working. So I worked with her to be able to understand what some of the sustainable investment options are to help her earn a market rate of return, grow her money, allow it to compound, but do it in a way that she did feel comfortable doing. And I really want to reiterate that even though the economy is very unsustainable right now, we still need to invest to be able to look after ourselves and our family, to ensure that we do have enough to be able to meet our savings goals, whatever they may be. And so really, want to reiterate how important it is to invest. You really got to start investing. And so, I'm going to jump into sort of 3 of the myths about sustainable investing. These are like 3 of the things that I hear from people all the time. These are probably some of the biggest barriers when it comes to sustainable investing. The first one is really just about investing in general. Myth number 1 is just that investing is all about math, right? I can't tell you how many brilliant people I know who have like postgraduate degrees in all kinds of amazing fields, but they're like, oh, Tim, I'm bad at math. I don't understand investing. I'm bad at math. I'll never get it. And I'm here to tell you, investing is not about math at all. I mean, there's a little bit of math, here and there. There are some numbers involved, just a little bit, but investing is so much more about a language. It's really about understanding the language, the different terms that we use. For a lot of people, we just never learned this language in high school unless you had parents that went out of your way to teach this. Most people just don't speak the investment language. And so the result is that they feel confused about it. And of course, you'll feel confused if you don't speak that language. But it's much more about language. And it's also kind of about philosophy, to be honest. A lot of it is concepts. And it is more about this more sort of philosophic approach, understanding how markets work. It's less about math, and it's much more about language and philosophy. Number 2 is that, oh my goodness, I get this all the time, that investing seems so complicated, right? And doubly so with sustainable investing, because then we're layering in a whole other area. And again, if you don't understand a language, of course it's going to seem complicated. But I'm here to tell you, investing is actually super easy. It's really not rocket science. It's very straightforward, with a little bit of learning, mostly around the language and understanding, these different terms and what they mean. It's really not hard to figure out. A lot of people I know in the investment world are just complete idiots. I'll be honest. Some of the most successful people in the investment world are just not the brightest people. So don't feel like, you're not smart enough, or you'll never understand it, or that it's too complicated. I really, really want you to understand that it is so much simpler than people realize, that it doesn't have to be complicated. The third myth that I've got is that sustainable investments have lower returns. Oh my goodness, I get this all the time. People automatically assume that if you're going to invest sustainably, right, that somehow you're going to sacrifice financial returns. I'm here to tell you that is not the case at all. That's a complete myth. Sustainable investments have done basically the same as traditional investments over a very long period of time, over the last several decades. I thought about putting in some graphs here and like proving that sustainable investing have similar returns as traditional investments. But then I kind of remembered, myth number one, I told you there wasn't too much math. I didn't want to confuse people with graphs. In the Q&A, I'm happy to share my screen and show you the evidence. There are several different ways that I can show you that sustainable investments have very similar financial returns as traditional investments. Really want to communicate that you don't have to sacrifice financial returns at all when it comes to investing sustainably. There is a little bit more knowledge. There's a little bit more complexity than there would be otherwise, right? We're making these intentional decisions. So we need to understand a little bit more language and a little bit more philosophy, frankly, when it comes to sustainability. But you don't have to sacrifice financial returns. That is not the case at all, right? From there, really want to shift gears and start talking about some of the actions that you can take today, things that you can do to get started on a sustainable investment journey right away. So the first action that I always encourage people to do is to join a credit union. This is one of my favorite things. Is teaching people the difference between banks versus credit unions. I think so much of the unsustainable activity within our economy is from the banking sector. Like we all know, especially here in Canada, the big banks, very, very powerful and do a lot of terrible things. What people don't realize is there's this amazing network of credit unions that basically do the same thing as the banks in terms of all the financial services, but they do it in a way that is so much more community focused, like so much more community focused. It's way more democratic. I have a blog post that Talitha, if you can put in the chat for me, if people want to read it, but just basically I did a post, 3 reasons why credit unions are awesome. This goes into why credit unions are a more sustainable way for people to do their banking. You don't even have to fire your bank right away. Sometimes people get really nervous. Oh, I have, my mortgage and my credit cards and I have everything set up with my bank. And you don't have to fire your bank right away. Just join a credit union. There are a lot of free accounts that you can get where you get a free checking account. You can just start using that for your day-to-day banking. And over time, just like switch things over to the credit union. If you want to be adamant about it and, go out of your way and completely cut ties with your bank, fantastic. That's great. I have another blog post on my blog that's how to fire your bank. But really, I think the easiest thing you can do, the first step you can do is just simply join a credit union. You'll still get the same banking, the same services, online banking, absolutely everything will be comparable to your experience at a bank. But instead of, going your money going towards profits for shareholders and getting invested, the banks tend to support a lot of fossil fuel development. With credit unions, it's all, your money stays local. So when you have your deposits at the credit union, it stays local. You're helping your local economy. Much more sustainable. Credit unions are amazing. So, that's something you can do tonight. You can open up an account with a credit union online tonight. That's something you could do right away. Action number 2 is to start asking some questions about where's my money. I can't tell you how many people I meet, and they just tell me they have a little bit of money here, a little bit of money there. It's kind of like spread all over, right? The first step I always do with clients is to start to consolidate, have a little spreadsheet where we can just list where's my money, if it's in the bank, if it's in an investment, right? Wherever it is, just start to list those things and then start to ask, well, what's it doing there? Right? If am I taking an appropriate level of risk? If I'm investing, what am I investing in? Just start asking questions about where your money is. That this is a wonderful thing to do, just in terms of getting your house in order and really kind of cleaning up your own backyard a little bit, figuring out, exactly what accounts you've already got open, where you're at right now, how your money's invested, but then start to dig a little bit deeper, right? What companies are inside the funds? Where is my money being invested? What are the fees that I'm paying on my investments? That this is really kind of like always a really important step. Something you can start doing tonight is just consolidating where you have your money and starting to ask some questions around where that money is actually being held. The third action that I have is to take the Good Investing Foundations course. So this is a course that I'm really excited to be able to present to you. It's the first time I'm really showing it to anyone. So absolutely thrilled to be able to show you that if you want to take further steps, I've really made it simple and straightforward for people to wrap their head around how to start investing sustainably. The way we do that, oh, hold on, there we go, is I'm just going to bring up my foundations course here. So, really, this is just on my website, Talitha, if you can provide the link to this. Basically, for people who want to give more thought and more intention about where their investments are, really, you can master the fundamentals of sustainable investing in just 4 weeks. I built this course. You'll be empowered and confident about your financial future. Really, this is a 4-week program that equips you with the knowledge and tools you need to take control of your financial future. I've really designed this for people who are at the start of their investment journey, right? If you know you need to invest, but you feel uneasy about the state of the world and the economy, if you're afraid you're going to mess it up, if you've got questions about sustainable investing and you feel overwhelmed and not sure where to start, this course is for you. That really this is about the foundations of sustainable investing in general, but then also sustainable investing. I've helped more than 1,000 people do this. I think the course, I've had about 400 people go through the course. We do some surveys before and after. About 95% of people said they gained a better understanding of sustainable investing, and 98% of people said they felt more comfortable navigating their investments. That really, if you're not sure where to start, so many of us, it can feel overwhelming and complicated. I've really tried to break it down as much as possible. Basically, the way I've structured it is I am doing it in cohorts. That I tried doing an on-demand where people can watch the videos and do it at their own pace. But sadly, I found that a lot of people started the course but didn't finish it. So that's why I'm kind of going back to what I know works, that in my original course pilot program, we did weekly live trainings, and that worked for a lot of people. A lot more people got through the course. So we're going back to that. It's going to be once a week. We're going to do a class. We'll do a deep discussion. And of course, I'm going to provide some actionable tools for you to be able to take those steps. Got class recordings and private links that are available the next day. So just like with this webinar, if you're not able to make it live, no problem at all. We're fully set up. You can watch the video, but the idea is the accountability. We want to keep you on pace so that you don't just procrastinate and sort of never get around to it. A supportive community of like-minded investors. I've created a community forum for people to be able to ask questions, for people to engage, talk to each other. Really, part of my hope is to build a community to be able to get this going. And you get a free one-on-one meeting with the foundation founder and instructor, me, after the course ends. So it's pretty awesome. I've kind of built this. It's 4 weeks. Boom, 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 boom. Really, I'm running it. I'm starting in, I think it's in about 2 weeks, September 19th. We're doing it every Tuesday from 7 to 9 p.m. Eastern. I carve out 2 hours. It probably won't take that long. I'm aiming more for sort of like an hour and then time for discussion afterwards. So probably closer to an hour and a half, but I'm saying 2 hours just in case we get into a very fruitful discussion. But basically, the way I've structured it is, class number one is what the banks don't want you to know. So this is all of my tips for how the banking sector works, how investments work, all the systems. This is all the stuff that I'm kind of cynical. I think that the banks like to keep us ignorant about investing, right? Just because they want to make money off of us. And so if we're ignorant, we just hand them our money and we don't ask any questions and we end up getting ripped off. So really, this first class is about those financial basics, the stuff the banks don't want you to know, the stuff we should have learned in high school but never did. From there, class number two is Sustainable Investing 101, where we'll go into a lot of the topics and the different approaches that we use when it comes to sustainable investing, so that you can start developing your own theory of change, right? What's the change you want to see in the world, and how can that be reflected through your investments? But then, really, I got so much feedback as I was doing this course that people wanted to go deeper, that, so many people were like, Tim, the basics is great, but I really want to know. I want to kind of, nerd out with you, and I want to dig deeper. And so that's why I've got this class number 3 is Sustainable Investing 201. This is where we really do dive deep into, not more necessarily more complex, but I would say more nuanced aspects of sustainable investing. One thing that's been really interesting is over the past, I'd say, year and a half, there's been a big backlash against ESG, where a lot of criticisms have emerged and people are very now critical of a lot of these sustainable investment theories. So, we're going to talk about it. Let's explore it. Let's dig into it and see what's right for you. And then in the fourth class, it's kind of a choose your own adventure that, really the core of the model for me has been helping people build a DIY sustainable portfolio for people who want to do it themselves. That said, a lot of the feedback I got from folks is that not everybody wants to do it themselves. Not everyone is sort of as nerdy as I am, or kind of has the confidence to be able to manage their own money. So I wanted to add this path for people who want to work with a financial advisor, that I'm going to teach you how to work with a financial advisor, how to ask questions, how to advocate for your values, how to ensure that you're getting the most out of that relationship, right? To really be able to make sure that if you do decide to work with a financial advisor, that, you feel really confident going into those meetings, and that you're going to get what you deserve out of that relationship. So that's really the offering that I've got, that I've created. I'm doing $297 plus tax. I'm not doing any discounts or any deals. If you want to do a group rate, if there are, 2 or more of you who want to take it together, then great. Send me an email. Would love to hear from you. Happy to discuss sort of a group rate for it. But otherwise, really just trying to keep it as simple as possible. And this is the offering that I'm putting forward for you today, that, would really love, if you want to dive deeper into sustainable investing, this is the way to get started. This is going to cover absolutely everything you need to know about sustainable investing, to then be able to take control and take action and actually start investing with confidence and in a way that is aligned with your values. So that really is sort of the big offering that I've got for you today, is that Good Investing Foundations course. I've put a lot of work into it. It's something that I've continued to iterate, and I'm really, really excited about this latest iteration. And I really hope you'll join me on that journey. So the final thoughts before I open it up for Q&A, because I've been noticing some action in the chat, and I'm really excited to get to all your questions. That to me is my favorite part of this, but did want to leave you with some final thoughts. Really want to reinforce that investing is important, even though we're in an unsustainable economy right now. Investing is still so important that we can be part of the solutions. Using our life's energy, using our money, we can not only sort of avoid the bad stuff and avoid making the problem worse, but we can also do more good in the world with our money. That if you're going to invest, please invest sustainably. that if you do care about the world and about the future, you don't need to sacrifice financial returns. Really, sustainable investing is a great option for people who are concerned about the state of the world, but know that they need to invest for their own financial future. And really the last thing is, the old saying that the best time to plant a tree was 30 years ago. The second best time to plant a tree is today. That I can't tell you how many people I meet where they're like, I wish I had done this, 5 years ago or 10 years ago. I should have started doing this. I should have switched my investments into sustainable investments a while ago. Don't worry about that. What's done is done. We are in the moment. Really understand the second best time to plant a tree is today. That if you can start this journey just to be able to align your investments with your values, I promise you're going to feel so much more confident. You're going to feel so much happier, and you're actually going to feel good about your investments. Really, that's it for my presentation. Thank you so much for attending. I know this one was a little bit more kind of higher level. I didn't want to get too deep into the weeds. I'm happy to go there during the Q&A. Of course, if you have any questions, you can always reach me, tim@goodinvesting.com. I love getting emails from you. So please just know that I'm absolutely here for you. But with that, I'm going to stop sharing. I'm going to take a couple of deep breaths, and I would love to be able to hear some of your questions. I'm hearing Tim, or oh no, hopefully everyone's been able to hear me. Hopefully everyone can hear me well. I didn't get any messages that I needed to turn things up too much. So hopefully from most of you, you're able to. But I would love some questions. Let's see here. I guess there is a bit of a Q&A. Oh, but no, that was from when it was disabled. I would love to hear some of your questions. I'm happy to go into more detail about the returns. I'm seeing here, Monica, sadly, my sustainable investments aren't doing well, but maybe that's timing. Yeah, I mean, maybe I can talk about performance and just kind of like the state of the market and what's been going on, but, really understand that sustainable investments are designed to track the overall stock market, at least in terms of like the doing less evil options. So, I did have a little chart that I was going to put together, but maybe I can just kind of do that in real time. So let me just, I can show that real quick. That when I go to Yahoo Finance here, let me share my screen with you. There we go. That when I go to Yahoo Finance, just understand that as a whole, if I do something like, I'll do XBAL, which is the iShares Core Balanced ETF portfolio. I don't want to get too, deep into what this means, but this is a balanced portfolio. So this is a mix of both stocks and bonds. And that we can see here that, if I do it, let's look at it over the last 5 years, right? That we can see that, okay, here's the market was doing well. Here was the COVID crash of 2020. Right. And then the recovery, and it did really, really well. And then last year was just a terrible year in the markets. Everything came back down. Right. And then now, so far this year, it's been decent. It's been up a little bit. And so when we compare this to a sustainable version of this, right, we can see that the performance has been, I'll make it purple, is the sustainable version. That really this is nearly identical performance, right? You can see it did a little bit better. The purple version is the sustainable one, did a little bit better when the market was going up, but then it fell a little bit more when it came down. But really they are almost identical performance. Now, this is the sort of doing less evil side of the equation. When it comes to some of the renewable energy stuff, this is where it really does depend on when you bought it, right? For example, something like QCLN, which is a renewable energy ETF. I'll make this one green, right? So that you can see that if you bought it way back when in 2019, right, you've done very, very well. But, since 2021, renewable energy has been on the decline. Even if I just look at the last 2 years, I can see that renewable energy, but look how sort of choppy it is. So this is why it's really important that we don't go all in when it comes to things like renewable energy, that really is, it is going to be more volatile. And that really does depend on when you started investing. But for the most part, sustainable investments have really performed, almost identically as traditional investments. It's just when we start to get into some of the deeper green stuff or, things like that, that's where the timing matters a little bit more. I see a question here from Talitha. I mostly hear about avoiding sin stocks or divestment. How much do you personally recommend that as a strategy? So yeah, so again, there are these different approaches that we can use. Divestment, or sometimes we talk about exclusion, is a really good strategy when we decide for ethical reasons we don't want to own one penny. And this started in the sort of religious communities where people try to avoid sin stocks. So people would divest from things like tobacco or weapons or gambling, right? And now we often hear it in relation to fossil fuels, that it is a bit of a political move to divest from fossil fuels. And there are ethical reasons for doing it. There are also financial reasons for doing it. When it comes to this, really, I think that it's important to ask ourselves this question, if we want to divest, what are the things that are complete deal breakers for us? And if we want to avoid these things, if it's like not one penny, then that's fine. I have no problem doing that. But not everybody wants to completely divest from them. Some people want to use approaches like maybe only choosing the best of the sector. So I'm okay with owning some fossil fuel companies, but only the ones that are quote unquote the most sustainable, right? Sometimes people want to use a strategy that's called shareholder engagement, where we push these companies in the right direction. So, for me, I think that divestment absolutely should be part of the conversation. But it's just that everyone's going to have a different idea of what are the things that you completely want to get rid of. Jennifer has a great question here. How do you define sustainable? I like to avoid banks and insurance companies on principle, but I think they are often in sustainable investment portfolios. Jennifer, that's a great question. So, I just talked about divestment and from fossil fuels, and there are a lot of funds now that say no oil and gas or pipelines, no fossil fuels, but they include banks, and those banks fund a lot of fossil fuels, right? So again, this is where it's tricky, that there are a lot of different approaches that can be used. And really, it's less about how I define sustainable, and it's more about how you define sustainable. And if you're telling me you don't want to own any banks or insurance companies, that's fine. We can do that. There's absolutely a way to be able to do that. Right now, there might be some trade-offs involved. Obviously, the banks do well, right? Then we don't have exposure to that. Your investments might underperform a little bit. But if banks fall, some banks are in a bit of trouble right now. You're not going to capture any of those losses. So, really, it's understanding that there is such a wide spectrum of sustainable investment options. And so what I try to do and what I do in the course is to really go through those different definitions, go through those different approaches, really help you understand what those are, and then empower you to choose the approach that makes sense for you. That if you're telling me no banks or insurance companies, we can absolutely do that. But hey, let's talk about it. Let's decide what your definition of sustainability is, and then let's find investments that align with your definition of sustainability. All right, so a question from Candace here. It seems like there are a lot of options for investing out there. How do folks choose between ETFs, bonds, et cetera? So yes, there are a lot of options, but I think this is why I really built the foundations course, is that before we start understanding the different types of investments, the specific choices that we make, it's really important to get an overview of what these different things are. ETFs are exchange traded funds. They're like mutual funds, but they're a little bit different. It's really important that we understand the difference between mutual funds and ETFs. the way I often like to sort of describe the investment system is that at the top is your institution, right? That's your bank. That's where you do your credit union. That's where, you actually hold everything, where you sort of do your investing. From there, at that institution, you've got your different accounts. So we've got different tax shelters. So we've got RRSP, we've got TFSA, we've got different types of accounts. These are our different tax shelters. Those are like the vaults inside the banks. And then really the question you're asking is, what are the investments that we want to hold within each of those vaults, each of those accounts? That, do we want to own stocks? Do we want to own bonds? Do we want to own mutual funds or exchange traded funds? That really it's about understanding, you kind of have to understand that system and that language. Again, it's more of a language thing and understanding how all these pieces sort of fit together. But really what we want to do is that go through an approach to determine, your goals and your risk tolerance and kind of the big picture stuff. And then we can start to get a little bit more tactical about which accounts should we be investing in, and then what sort of investments do we hold within each of those accounts. So really, there are a lot of options out there. I know it can get overwhelming. And so that's why in the course, really try to break it down, start with the financial literacy to understand these different acronyms, these different terms, right? And then we can start to, wrap our head around the different decisions that we need to make, right? And that's how we really approach those, what types of decisions we make. Steve's asked, do you typically use return assumptions in line with formal guidelines, FP Canada, for example, for sustainable investments? So yes, absolutely. When it comes to assumptions about future returns, I do use FP Canada. So use those, really we can use those assumptions as well for sustainable investments, that really there is no difference. Just like we can use those assumptions for traditional investments, we can also use them for sustainable investments, which is awesome. But just know that, they come out with those assumptions every year. So I think, the last assumptions came out in March and things happen quickly. So for example, their assumption for inflation, we know right now is a little bit, under. So we absolutely use those return assumptions. Yes, but understand they are assumptions and we want to take them with a grain of salt. We're getting lots of questions, which is awesome. So I'm going to try to do a little bit of a lightning round, see if I can get everything through here. So Benoit asks, how about zero growth economy for a more sustainable future? Woo! So this is a great question. This is amazing. I love this. So, a big debate that's happening right now in sustainable economics is about this notion of a zero growth economy, or even a lot of people are calling for degrowth, which means that, if we are going to meet our sustainability goals, for example, if we're going to meet our carbon emission targets in line with the Paris Accord, that rather than aiming for green growth, which is economic growth, but, in a greener direction, that actually we should be prepared to accept zero economic growth or even degrowth, that we should plan for the economy to shrink. Now, this is where we get into the philosophy around this. I have a lot of thoughts. I'm putting together my thoughts for a presentation that I'm doing for a group in a little bit. I think maybe I can throw those together for a blog post or YouTube video, because I think this is a conversation worth happening. My personal feeling, this is my personal view, is that we do need to have some degree of economic growth. The reason for this is because of inflation, and because so much of our economy is based on debt and we pay interest on that debt, that we need to be able to have growth in order to cover interest payments on our debt. That said, I think that growth is a terrible aim for us to be aiming for as an economy. That I'm a huge fan of some of these different models of well-being economics or happiness economics. There's a wonderful author I love, Kate Raworth, who talks about donut economics, right? And in her donut economics is based on systems thinking, where it's about, can we have an economy that not only has economic activity, but does it within the bounds of ecological constraints and social cohesion that actually enhances social cohesion. So this is a huge question. I love talking about it. To me, it's been remarkable looking at the economy over the last, I'd say like 30 to 40 years. We've seen a huge shift from a goods-based economy towards a services-based economy. And so to me, again, there is a way for us to be able to have economic growth and do it in a way that is more based on the knowledge economy and service-based economy that doesn't necessarily erode our social and ecological systems. That said, jury's still out on this one. I think there's a big debate happening right now within sustainable economics. And so, I would love to have a deeper discussion about that. Jennifer asked, do I have a favorite credit union that I would recommend, or are they all pretty much the same? So it depends where you live. Credit unions are governed provincially, so you do need to find a credit union that is in your province. I'm a member at 2 credit unions here in Ontario. My personal banking is done through Duca, D-U-C-A. I really love Duca. They're a B Corp. I don't know if folks know what a B Corp is, but it's like a stamp of approval, like a benefit corporation that I really love. Also, they offer a 0-fee checking account. So I'm really cheap and I hate paying a monthly fee for a checking account. So I do love my account at Duca. My business, I actually do my banking through Alterna Credit Union. I've had a relationship with them for a long time. They provided me with a microloan to actually do my rebranding as Good Investing. So, the result is that I do have a good, loyal relationship with Alterna. So those are the 2 that I use. But credit unions by default are going to be so much better than banks. Those would be the 2 that I would start looking at. But there's a really nifty tool that you can use called the Exchange. And if you just look at the Exchange ATM network, so basically all credit unions are like part of this exchange network. And if you put your address, I'll put it in the Zoom chat, but if you punch your address into this, you can do like your home address and your work address, and you can see whether there might be some credit unions in your neighborhood that would strongly suggest finding someone, ideally with a branch nearby. Even though we do everything online these days, it's always nice to know that they do have a recent location. Monica asks, bonds seem to be not doing well right now. What do you anticipate will happen? Will it continue to get worse with our unpredictable economy? Oh my goodness, Monica, bonds had such a terrible year last year. Absolutely terrible. I can get into it a little bit. I don't want to dive too deep into bonds and why bonds have done poorly, but know that last year was really what economists are calling a once in every 50-year event for bonds. That basically the way it works is that bond prices have an inverse relationship to interest rates. And what's happened over the last 18 months, as we all know, is that interest rates have gone way up, right? Like interest rates have gone way up, which means that the price of our bonds has come down. So if you look at it on paper, the value of our bonds today is worth a fair bit less than it was a year and a half ago. Now, it's very rare that interest rates go up by as much as they have, right? So that's why the price of bonds have come down. Now, if interest rates keep going up, the value of our bonds is going to keep going down, right? That will happen. Today, the Bank of Canada kept rates stable. So we'll see. I don't have the crystal ball. I don't know. But if we think interest rates are going to keep going up, the value of our bonds will go down in the short term. But in the long term, bonds, I do expect bonds, if interest rates stay flat or if they come down a little bit, bond prices will go back up. But over time, bond prices do tend to revert back towards their mean. And in the meantime, any of the bonds that are inside our funds, that are rolling over, and when we buy new bonds, we're getting a much higher interest rate than we did, a year and a half ago when interest rates were very low. So bonds have had a very, very tough, I would say, year and a half. That said, I don't expect them, that drop that we saw, I don't expect that to happen again. The only way that's going to happen is if inflation stays persistent and if interest rates keep going up, which could happen, but I think it's very, very unlikely that, in fact, if the economy remains unpredictable, if we were to get a market shock, like a crash, if the stock market were to crash, I would actually expect bonds to retain their value or maybe even go up in value by a little bit. So this is my way of saying, don't give up on your bonds. Please don't give up on your bonds. It's not as bad as it seems when you look at the number and it looks like they're down a lot. Trust me, right? You will start to have higher interest payments from those bonds over time. Jennifer, I agree. Brenda writes, Jennifer, I agree. I have not had a very positive experience with credit unions and have never been eligible for any loans, mortgages, etc. Interesting. I also find most of them have ethnic or cultural group sponsorship and find them very unwelcoming as a Black Canadian female, which is more welcoming or not based on cultural or religious group sponsorship. Yeah. So a lot of credit unions like Duca, that was a Dutch credit union, right? So a lot of them did start with an ethnic or religious group. That said, they should be a lot more welcoming now. I'd be curious to know, Brenda, the credit unions you've had that bad experience with, whether, I know anything about them. I'd love to know so that I don't point people in that direction. That said, when it comes to loan eligibility at credit unions, I do get this question a lot about whether people should be switching their mortgage or their credit cards. I wouldn't worry about it. When it comes to debt, I would really shop around to get the best rate that you possibly can. The credit unions actually outsource their risk management. So when it comes to loans and mortgages and things like that, they don't do it themselves. They actually outsource that to a third party. So it's going to be the same risk assessment that you would get at a traditional bank. It's not going to be any better. And this kind of drives me nuts, especially when it comes to nonprofits. You would think that the credit unions would be more open to supporting nonprofits or social entrepreneurs or branded people like yourself, that they should be very, very welcoming of diverse groups. That said, in my experience, they've kind of been a pain in the ass. I was part of the Ontario Nonprofit Network, ONN. They incorporated as a nonprofit. They had been existing for a while, but formed a new entity that was structured as a nonprofit. We went to our credit union to get a credit card, and we had to keep the full balance with them in cash. So if we wanted a $10,000 limit on our credit card, we had to keep $10,000 in the bank for them to issue the credit card. Like, that's just wild. It was so frustrating. So it's definitely going to be hit or miss at credit unions. Brenda, we can totally work with you to find a credit union that will be more welcoming, but also understand that when it comes to your debt, that really with credit unions, I love it for my checking and my savings, but for your debt, I would just go with whoever's going to give you the best rate, whoever is going to give you the best terms, even if it's a bank. I don't love the banks, but if you can get a lower interest rate or better terms on your debt with a bank rather than a credit union, I would take the better deal. That sadly, I wish that credit unions were better when it comes to that. Okay, Olivia asks, which sustainable ETFs align with my values and why? Oh my goodness, this is such a big question. That really for me, it's not one ETF. I have a mix. I have a bit of a hodgepodge of different ETFs inside of my portfolio. That to me, I do have my different values. That for me, fossil fuels are a thumbs down. So I've completely divested from fossil fuels. But like somebody mentioned earlier with the banks, who was it? But someone mentioned in the chat earlier that they like to avoid, Jennifer mentioned that she likes to avoid banks and insurance companies. So I'm the same way. I won't invest in the big banks. I won't. So for me, I kind of have to go out of my way to find ETFs that actually do exclude those banks. So I've had to kind of create my own little custom portfolio. But again, there are a wide range of options. And that, maybe that would be a good post, as I can do sort of how I invest my own money. I'll talk to my wife. We're in the process of we've got a pretty big savings plan. So I know sometimes those YouTube videos are quite popular. How I invest my own money. Maybe that would be a fun video to do that. Adrian says, I've always had a great experience with Alterna. I've been with them for 30 plus years. So, I'd say hit or miss. It's been mostly good, but, certainly with a few frustrations, especially on the debt side. And Brenda says, Tim, they are not welcoming. I can talk about this later. I'd love to hear more about this, Brenda. You know, there is a real movement. I'm part of a couple of groups that really are about, financial inclusion. There's wonderful organization, SETSI, social economy through social inclusion. And through those conversations, you know, it's become very apparent that there is not a Black-owned credit union. There is not a credit union that specifically services Black members of the community. So there's definitely a gap there. I would love to hear more about your experience. Maybe we can do that offline via email, just to hear about your experience. You're not the first person I've heard that banking while Black is a terrible, terrible experience. And so if there's any way I can help you, point you in the right direction, to organizations that hopefully will be more supportive. And then, really my fingers are crossed that, that there will be a Black-owned credit union that emerges in the next little while. Can't promise anything, but I know there are some conversations taking place. I recognize the time. We've gone a little bit over here. Hopefully that Q&A was helpful. Really know that you will be getting an email from me tomorrow with a link to the video so that you can rewatch this, and that really would implore you to take a look at my Good Investing Foundations course offering. That for a lot of people, especially if you're kind of new to the game and trying to wrap your head around some of these concepts and the language and the philosophies, really that course is designed for you. So I really hope you'll take a good look at it. And if you register, I will see you in a couple of weeks. Thank you so much to everyone for spending part of your Wednesday evening with me. I'm so grateful for your time and your attention. Thank you so much. Have a wonderful evening. Have a wonderful week. And really want to thank you so much for spending your evening with me. My email, tim@goodinvesting.com. Know that I love hearing from you. So if you've got any questions, any concerns, any updates from me, would love to hear it. Thank you so much. Have a wonderful night. Bye.